Hello everybody, welcome to my video. Superior investing doesn't come from high quality assets, but from buying when the deal is good, when the price is low, and the potential return is substantial. No, these are not my words. These are the words of wisdom I borrowed from this book that I was reading, Mastering the Market Cycle by Howard Marks. I am sure you guys have wondered that why your stocks are plummeting right after you bought them. So much of time invested in identifying the stocks only to discover a few days down the line that your stocks is 5%, 10%, 20% down. And you're wondering that what exactly has happened wrong? Is my analysis incorrect? Have I done wrong in identifying the fundamentals of the stock? And many such more. You start to question your ability to understand and identify a stock. In today's video, we are going to talk about exactly this problem that you guys have been facing. I'm sure you guys have mastered how to identify a stock. So today's video, we are going to just touch base on identifying the stock part, but most part of our discussion will be catered towards what's the right time to enter the stock. So I'm going to break down today's video into 5 key framework that will help you to enter stocks at the right time and will help you to change your mental model. Number 1, sizable margin of safety. So margin of safety means buying a stock well below the intrinsic value, giving you a cushion against errors or market volatility. One way to apply it is by tracking valuation. Enter when the stock trades 20 to 30% below its all-time high, but only if the fundamental remains strong. Market mood indicators like Nifty P ratio, fear and greed index, or volatility index can also guide you at the correct timing. During overly pessimistic phases, quality assets often trade at discounts. Combining market of safety and the technical levels, the support zones or moving averages helps you avoid overpaying and improves the long-term returns while reducing the downsizes. So once we have covered the 5 mental model, we are going to go back to a screener and help you identify the stocks that you can enter in today's time. Number 2, quantitative analysis. Quantitative analysis of a stock means evaluating a company using numerical and measurable data rather than opinion or qualitative factors like management style or brand reputation. To enter the right stocks, do ensure reasonable sales growth, profit growth, or ROCE growth over mid to long term. So remember these words that I just used. I will again use these KPIs to measure the stock while we go to the screener towards the end of the video. Number 3, understanding business cyclicity. So businesses, I'm sure you guys are aware, business goes through cycles of up and cycles of down, right? Identify the trend, monitor the macro indicator like the GDP growth, inflation numbers, RBI policy, and credit cycle. These will help you in identifying the right time to enter the stocks. Number 4, technical analysis. So technical analysis, when it comes to timing or entry into a stock, 2 technical analysis can be very helpful. There are a lot of technical analysis that is out there in the market. We'll not overcomplicate. In today's video, we'll only talk about 2 specific technical analysis that is very important for you to identify the entry point of a stock. Number 1 is the RSI. RSI stands for Relative Strength Index. So it measures whether a stock is overbought or oversold. A value below 40 often signals the stock may be undervalued, giving us a potential entry point or buying opportunity. Similarly, the second indicator that we are going to talk about is called DMA, which is daily moving average. So when the 50-day moving average crosses the 200-day moving average, it is generally considered a good time for you to buy. It is called as golden crossover. So it's a good entry time for you to buy. the RSA which is lesser than 40, the 50 DMA which is greater than that of 200 DMA. Using both these indicators will help us come to a conclusion as to what is the correct entry point for entering the stock. Number 5th is patience. Patience to wait and hold for long term. Okay, this is a bit more philosophical than science. So if you have gone through the Intelligent Investor, wherein Benjamin Graham talks basically about how patience is the most important factor. So remember, the real edge in investing isn't just picking the right stock, it's the patience to hold it through cycles. Cycles of extreme euphoria and extreme caution. Cycles of up and down. As Warren Buffett said, the stock market is designed to transfer money from the active to the patient. Stay disciplined, focus on quality businesses, and let time compound your wealth. So, just as a wrap up of today's video, we covered today what is the correct entry point and how you should hold a stock for long term. Now let's move on to the screener. I am creating a new screen. So you remember in the beginning of the video we spoke about margin of safety, right? So the first thing that we discussed about, it is down from your 50-day high and it should be greater than 20%, right? Then the next thing that we spoke about is the quantitative analysis, right? Wherein we spoke about sales growth. So sales growth of more than 5 years is 20%, and then profit growth of 3 years to be greater than 20%, and ROCE, which is return on capital employed, to be greater than 20%. And then we spoke about few technical analysis as well, right? Which is the RSI. RSI needs to be lesser than 40, right? And then DMA, daily moving average of 50, should be greater than DMA of 200, right? So these are all the talking points that we discussed today. Let's run the query. Now you see, these are all the stocks that we can enter now. Now we discussed on the business cyclicity as well, that now it's a good time for us to enter the FMCG stock. So based on that, go through this portfolio, and if you find any FMCG product that could be considered as a good buying opportunity. The other thing that I am very closely monitoring these days is the capital goods sector, like Apar Industries, RMC Switchgear. These are also pretty good companies. That's it, guys. Now we come to the end of the video. Thank you so much for watching. In case you got some valuable insight from the video, to make the YouTube algorithm happy, please do hit that subscribe button. And for more such insightful video, just comment that what should be the topic for my next video, and I promise to come back with you with more insightful videos, more data-driven insights for you guys to get best returns out of your investment. Thank you so much for watching. Until then.